Business types, so important. What's it all about? What are we going to be talking about today? We're going to talk about accounting in general for different business types, how that kind of goes down. We're going to talk about piercing the corporate veil. What does that mean? And we're going to talk about the sole proprietor, the most common business structure in the United States. Without further ado, picking out accounting flashcards for reference. We're going to be talking about generally accepted accounting principles. So regardless of the business entity, first of all, what is the business entity anyway? Regardless of a business entity, accounting should be under generally accepted accounting principles. Maybe if it's not, maybe it's under a tax basis or something like that. But we're going to have a general ledger, right? It's going to be double entry. And if it's under GAAP, it is going to be accrual basis accounting. So different entities might include a sole prop, right? Sole proprietor is owned by one person. All you need to do is start operating as a business. It's a beautiful thing about America. We love it. A lot of sole proprietors in this country, as in the United States of America, are consultants. And you need to only file a easy Schedule C on a 1040. Nothing too fancy, maybe some local business registration. Next up, we have a sole member LLC, which is limited liability company. That kind of operates similar to a sole proprietorship, but now you start getting into limiting liability. Now, what does that mean? If someone's operating and their employees do something terrible, some terrible mistake, and the insurance doesn't cover, and it's under a sole prop, which you can still have employees, they can be personally liable for things. So that can be really bad. There's also an LLP, limited liability partnership. Now you start getting into partnerships. There's just a regular partnership where two or more people are operating. Now, both in the sole prop and the partnership, the owners can be held personally liable for damages. So any normal attorney is probably going to want to steer people into a sole member LLC, which is just owned by one person. Maybe it's a corp, big C, C for capital, or it's actually subchapter C for the IRS, but I like to say C for capital because people do C corps when they need to raise a lot of money. And we also have the S corp. So as a business owner, you're faced with a lot of different decisions starting out, and there's always costs and there's always benefits. What's going to help and what's going to cost money. So in a perfect world, for example, let's say you own 5 real estate structures, 5 apartment buildings. It would be completely awesome to have an entity up here and then have sub LLCs. So every single property has its own protection, let's say, and then you have this other master business entity, but that might be cost prohibitive. Accounting expense, the expense for filing different tax returns, as well as state and local compliances and expenses. So there is definitely no free lunch in these business structures. Another thing, some people go out there and they just register themselves a corp. And so this corporation, I like to put like a little bubble, protects its owner. But in order to get this, you need to treat this thing like a corporation, or if it's an LLC, like an LLC that's living on its own little island. So I have this corporate island with this ugly, this is actually a truffula tree, Dr. Seuss. So the corporation needs to stand on an island completely separate from the owner. Now, if this owner starts treating this corporation like a personal bank account, doesn't do filings, and maybe they're even negligent, they can be personally liable for corporate actions, such as the employee having the terrible auto accident, the excess of damages, probably sued in some lawsuit, they can come after the owner. The other thing, piercing the corporate veil, if this owner is negligent, they do not have protection. So this corporate veil of sorts, or this corporate bubble, can be pierced by the attorney. because they say, surgeon, if you perform surgery drunk and you're negligent and the insurance doesn't cover, they're going to be personally liable. You can't just set up a corporation and start doing whatever the heck you want. That is just not right. So that's called piercing the corporate veil. So a lot of people go out, they just get a C Corp, they don't have minutes, they don't have meetings, they don't have a separate bank account, and they're just treating the corporation like they would a sole proprietorship. That corporate veil may be pierced. Now, let's go into this structure, sole prop, sole proprietor. Now, if you're a consultant and you just start taking checks, taking money in, that is going to likely be reported on your individual tax return as a sole proprietor. The most common business structure in the United States. It's almost like a lack of business structure. Really what it is it's just the individual. And so the great news is it's easy to do, right? No separate bank account required, although highly recommended. Another advantage is that costs less. The huge major disadvantage is unlimited personal liability for actions. You can also have employees, by the way. You can have wages to employees. Huge is no liability protection. By the very nature, no investment. There's only one owner, sole, as in sole surfer, as in solo, as in uno. No investors. You can still take credit lines out. Credit lines. Now, obviously, disclaim the world. This is just for educational purposes. Get a CPA. Get someone who knows what they're doing. But look, a sole prop is really practical for a lot of people. I've seen actually even a lot of dentists operating under sole proprietorship. Now, why would a dentist operate as a sole proprietor? I'm not an attorney, which you should always consult with the business structure. But what I've seen firsthand is these dentists were operating as a sole prop because they have massive amounts of insurance. And if the dentist does something completely negligent, they're probably going to be personally liable anyway. So don't let a structure get in the way of business. And a lot of times if you're seeking investment, talk to your investors because they are going to have an idea of what they want. Sole proprietors are often on a tax basis and maintain a profit and loss. Profit and loss, we all need to remember, is basically income in and income out. So the sole prop will have a P&L, and it's going to have a balance sheet, and it can have all the other financial statements as needed. Generally, the sole prop is a little bit smaller. It's very practical and quick. You can go to the IRS, and you can operate using an EIN to give you a little bit different number than your social security number. That's not always great to have that flying around, floating around. So you can get the employee identification number as well. And all in all, you can also have more than one sole proprietor on your tax return. So you can have different lines of business. If you have a loss and you have a proper business purpose for it, it's possible that you might have some other income to offset on your tax return. But a lot of different rules in the tax camp. Just know that when you start taking in money, and let's say you get a 1099 for $10,000, you're probably also going to want to start taking some expenses. To substantiate expenses, you're always going to want to have receipts. Try and use a separate bank account. And after you want to move on from the sole proprietor, generally any attorney is going to be able to try and get you in whatever you want to do, whether that's a sole member LLC or a C Corp. Just always pay attention to when you do it and the reasons why, because there can be a lot of costs associated. And if you don't have any income, maybe it's not worth doing it yet, but only you and your attorney can really decide that. So that's been a brief overview of the sole prop. Lots more in the Accounting Flashcards app. Also be sure you're using the quiz to select only business types and do some drilling using the accounting quiz game as well. Thanks.